oil industry today brings us different challenges. Some are new, but most of the challenges are challenges that we have faced in the past. And I think in the areas of, we'll continue to have to manage price volatility, the fluctuations in demand and supply. We'll continue to have to find solutions to develop new projects in deep, ultra deep water and the new frontier projects that are becoming available in the landscape of the industry. So the focus here, even though we've been able to have a competitive oil sector in Africa, our focus should be to continue to drive the cost down. We need to drive the cost per barrel down so that we are able to keep investment coming in. We need to develop our industries to be able to produce and fabricate more of the infrastructure, the platforms, the FPSOs in Africa, so that it's cheaper to do so here. We also need to pay attention to develop our workforce to be competitive in the global perspective, because the oil industry is a global industry. So if we do that, I think we'll continue to set the pace in terms of making Africa the place of choice for investors worldwide.
Mr. Andrade touched upon diversification there. What are your thoughts about that, Mr. Kraga?
Thank you very much. I think, just building on what he said, in addition to the fact that we need to bring down our costs, we also need to realize that a lot of our assets are higher emission assets when you compare to the rest of the world. So we actually need to have a dedicated focus on lower carbon opportunities, particularly natural gas, LPG for clean cooking and the like, because that in the search for funding, it's critical that you take those into account, especially things like environmental, social and governance, ESG issues. And to attract that capital, you have to be cost effective, and you also have to focus on cleaner forms of energy. So natural gas, particularly for power generation, LPG for cleaner cooking, and then some of the more mature types of renewable energy like solar, for example, which has gained some traction, I think would be where we should focus.
And your thoughts, Akin?
Yeah, I think that from the standpoint of value add, the net zero narrative, in my very humble opinion, I think is a great ambition. It's good to protect the planet, and it's good to think of the future. The notion for Africa, of course, is that whether we like it or not, eventually this will happen. What do we do with the industry today that's very relevant? And I stand on the conversation shared by my colleagues that we have to think about optimization. Not optimizing our technologies, partnering with those that can assist in optimizing those technologies. It's great, of course, for us to manufacture technology, but I think that if we were to take the net zero ambition of 2050 seriously, trying to reinvent the wheel at this stage may actually be counterintuitive. So it may be useful for us to focus more on asset optimization, focus on gas for good, because frankly, gas is good. And then, of course, collaboration. How do we collaborate together to make this worthwhile for the African people?
Okay, so on to our next question. Mr. Andrade touched upon regulation. So my next question is, are there any proposed regulatory amendments that could initiate further international interest within Africa's oil and gas markets? I'll start with you, Mr. Andrade. What are your thoughts on that?
Well, we have just touched on the fact that we need to keep the industry competitive. So in this space, the legislation needs to be in sync with that idea. I think we need to focus on creating and developing legislation that is agile, that fosters contractual and fiscal stability, given that this is a long-term investment industry. We need to also bring legislation that gives visibility to the investors over time of what the regulators and the different actors in the sector plan for the industry. We also need to develop regulations that are flexible enough to adjust to the market trends and transitions. So in Angola, for instance, in recent times, we implemented a series of reforms to reorganize the sector, to bring more clarity between the different entities that act in the industry. We also implemented reforms to give visibility to the industry itself on what our plans are for licensing rounds, bringing blocks, our strategic exploration activities, how it looks like, what we want to do. We also brought regulations to make sure on the competitive front to give incentives for the investors to go after those stranded resources and marginal fields. So there is a lot that we can do. As I said, the industry landscape right now is a bit different than it was years ago, so we need to continue to find solutions to be competitive in the workplace, in the marketplace.
Okay, Dr. Ibrahim, let's borrow your expertise on this. Do we need proposed regulatory amendments or adjustments according to your knowledge?
Most of the time when we talk of regulations and legislations in the industry in Africa, we tend to want to create an environment that is heavily attractive to foreign investment. And sometimes we bend the rules in order to compete amongst our own countries on getting foreign financing in our countries. It's obvious today that if you're going to attract foreign investment into your oil and gas industry, particularly the oil industry, you have to give more than what you would have given 15 years ago in terms of concessions. And there is a limit to what you can do to attract investment in this industry today. Things have changed. And I think the way to go is not to keep creating what you call an investment-friendly environment. I think we need to change strategy. We need to ask ourselves, what can we do within the African continent to raise the financing we need to continue with this business? What can we do to raise the level of expertise? And what can we do to acquire that technology? Unfortunately, to date, our thinking has always been we can't do it without external support. Our position, and maybe let me say my position, because this is not, I speak for Apple, but in this case, I hope my ministers are not around to say, no, they don't agree. My position on this, seriously, is that for as long as we go the way we have been going the last 50 years, for so long will it take us to be where we are. We will not get out of energy poverty, we will not get our countries out, because our industry, the oil and gas industry in Africa today, is not geared towards meeting the African need. It's geared towards meeting the needs of others. That is why you find pipelines running from wellheads to the ports or to the seas, so that your oil and your gas or whatever will go out. While the people that are on the line, on the pipelines, do not get the power or the energy that they need. So, Madam, what I think really is this. We need a fundamental reassessment of our concept of running this industry with what has happened with energy transition. My colleagues have talked about finance, getting direct foreign investments, etc. Believe me, there is a limit to how much you can get it. If you want to be able to sustain this industry beyond 2040, 2050, empower your people. We have 1.3 billion people on the African continent. If you make it possible for them to be able to pay for energy, all that you're producing on the African continent will not be enough for you. Not to talk of exporting the larger chunk of what you're producing, and then your people are still in abject poverty, energy poverty.
Okay. Mr. Krager, empowerment of your people, what is your take on that?
Thank you. So there's a gentleman, I think it's Tijan Thiam of Cote d'Ivoire. He was speaking at an investment forum in Senegal, I think earlier this year. And he said, which I really believe, he said, everybody talks about foreign direct investment, but the best way to attract investment is to make your local companies as strong as possible. If you in the country who speak the language, grew up there, are not making any money, why will a foreigner come? But in any event, you still need to have clear regulatory frameworks that govern the investment horizon that you're looking for, whether it's local or international. So take, for example, the Petroleum Industry Act in Nigeria, which was signed into law this year. I first worked on that act in one of my previous lives when I was at ExxonMobil in 2008. This started about 20 years ago, but finally we have clarity on fiscals. We have clarity on regulatory frameworks, who's regulating technical and commercial of the upstream, midstream and downstream. And with that in place, at least as an investor, you are clear on what regulations you have to take into account as you're putting or deploying your capital, which I think is very important in any event. So I definitely believe in empowering our people, but I also believe that for an investment horizon, you have to ensure that clear fiscal, regulatory, and other frameworks are in place to support that investment journey. Thank you.
Jens, I see you shaking your head, and also Akin. Would either one of you like to say anything?
Yes,
Akin.
I think that regulation is an enabler. And I do agree that it needs to be adaptive, and it needs to speak to the moment. In terms of empowerment, I think that a lot of countries in Africa, the oil-producing countries, are putting together strong regulations that enable active participation of locals. Nigeria is an example. Angola is another that I'm very familiar with. And also on the net back side of the fence, a lot of locals, Nigerians, for example, are investing heavily in refining capacities, modular refineries. There's a net back. Genesis continues to invest in gas commercialization, turning it into power. So I think that there needs to be a pandemic level of local investment. I totally agree with Dr. Brand that, Dr. Mara, that we need to first clean up our house and then welcome the guest properly. So, thank you.
Jens?
Yeah, I think first let's sort of rebase the conversation a little bit. I mean, the regulatory framework is critical, and having a stable, clear regulatory framework is imperative. But I do feel, and I'm a Norwegian, so I'll take a little sort of flack on ourselves here in a second. But I do think investors are unduly punishing the African risk. There is a annual default study done by Moody's where they look at infrastructure projects across the world, and the default rate for African infrastructure projects is lower than US power. We raised our fund in 2017. Rob's very excited about this and want to keep going. At $1 billion, we're apparently the largest fund operator investing in Africa right now. That is embarrassing. You look at I-Squared, some of these larger funds raising double-digit funds in infrastructure, but they're sort of skipping by Africa. I think the regulatory risk is not limited to Africa. My own country decided in their infinite wisdom to cut the tariffs for gas export pipelines by 90% about a month after that whole system was privatized. and sold off to a number of infrastructure funds. So this is a risk that is omnipresent. But I think on the positive side, one is regulations, absolutely. The other one is to stimulate demand. The gentleman on my right was talking about make sure you maximize the resource. Together with Angola, we are in separate companies, but we're after the same thing. We are utilizing these sort of stranded gas pockets in Nigeria. And Nigeria has been very agile in promoting legislation to make sure that is being enabled to, so private capital can come in and take flare gas, which otherwise would have been flared, and convert that into power generation for customers that otherwise would run on diesel.
Thanks. You mentioned Nigeria there, which ties into my next question. I'll start off with you, Irene, from your perspective, having worked with OPEC for a number of years. Many countries like Congo, Angola, Gabon, Namibia, Nigeria, and Morocco, they've improved their regulations to attract investment in the downstream and upstream sectors. In your experience, have there been any success stories? Irene, do you have any thoughts on that?
Yeah, well, I think that there is still more to be done, especially in the downstream sector. Currently, the African continent exports over a third of its extracted fuels. I mean, in any continent, that is not sustainable. And then we are looking at Africa being able to meet its long-term obligation of providing enough energy for its population, its growing population, because there is forecast on increase in population from about 1.3 billion now, as it is today, to about 2.5 billion in the long term. So Africa needs to start to invest in, more investment in the downstream sector, especially in the refining, and because in the long term, petrochemical industries will continue to use fossil fuels to even make household products for the population that we're anticipating. Also, I know that a lot of African leaders shy away from investing in this downstream sector because they feel that it's too capital intensive. Sometimes they even think they have small markets, they do not want to double into it, and some of them even think that they do not have enough supply from fossil fuel supply or crude oil supplies. So this is an area where Africa also needs to synergize to ensure that there are intra and international trades that will help enhance, supply of products that is needed to feed or to energize the continent in the long term. Thank you.
Okay, great there. Mr. Andrade, you're representative of Angola. What's your perspective?
Well, as my colleagues already mentioned, having a strong regulatory framework comes a long way. It's needed to have clear legislation so that the investor community and the stakeholders have a clear path and what to expect. I think in terms of the measuring the success of what we have done in Angola, for instance, from the reforms that were implemented in the last few years, we can say that we have seen we are moving in the right direction. We are much closer to the investor community in the industry and its stakeholders. Some of the reforms that we implemented in terms of giving incentives, we are seeing those projects being progressed and developed and coming online. We are developing new resources, as I mentioned before, that a few years ago were considered not to be economically viable. So we're bringing those resources to progress the development of those projects and bringing them online. So in terms of measuring success, I think for what we have seen of the reforms that were put in place, we are seeing good results. Obviously, we are not where we want to be, so we'll continue to look and to improve the regulatory framework to continue this path to even greater success.
Akin, as a chairman at Genesis Energy, what's your take?
I think that again, the successes are very evident. But I want to speak to the ultimate outcome of all this investment in the oil and gas sector. For countries that are early days, you have countries like Gambia that are still exploring. You have countries, Nigeria, Angola, that are very matured. Regulation, open arms to investment is great, but I do agree with Jens that we've learned that capital is drying up fast for oil and gas exploration. The capital for optimization might still be there, but we need to look at where's the market today. The market is favoring more permissibly gas. Oil will continue to be sold, but what are we doing with the money? So it's great for us to be able to sell oil, but how that revenue is used, where it's directed to, is also critical. So internally, my sense is that we need to have very frank conversations. It's great to point fingers at others, but I think mostly when you do this, there's a lot coming back to you. So how should Africa position itself in the monies it's getting from selling its oil? How do we remain attractive to the market that today sees oil as a very dirty word? So you have a lot of oil companies today moving away from being called oil and gas to just energy because the market is moving. And we need to, rather than fight the storm, we need to ride that storm. And the storm today, we continue to favor gas. So if we can appeal to our brothers and sisters who have the capital, most of it we don't, because the revenues that we have go to G&A. We use it to run our countries. There's very limited capital remaining to build infrastructure. So I would say that there's a lot of great news, but there's a lot of hard work that needs to be done. And there's a lot of challenge we need to put to ourselves. How are we using this money? And how can we get the exemption from the real capital world on how some sort of palliative may be given for the African oil and gas, for those who are still exploring and for those who need to optimize.
Great. Akin spoke a little bit about the future there, which brings me on to my next question. Irene, from your perspective, where do you see Africa in the future?
Yeah, thank you very much for that very valid question. Africa has abundance of natural resources. As a matter of fact, Africa has proven oil reserves of about 126 billion barrels. And it also has the reserve to production ratio of over 56 years. That's to tell you that oil will play a very significant role in energizing the continent. In a recent study concluded by OPEC on long-term energy perspective for Africa, we discovered that the demand for oil will continue to grow. I mean, in the long term, it will grow to reach over 7.3 million barrels of oil equivalent per day compared to its 2020 levels of 4.4 million barrels of oil equivalent per day. The share of oil will be over 25% in the entire energy mix of Africa. Now, coming to gas, gas will also play a significant role in the African energy. The share of gas over the long term will be about 17%. And the long term, by the long term, I mean for 2045. That's what OPEC considers as the long term. Gas will grow from over 3 million barrels of oil equivalent per day by 2025 to about 5 million barrels of oil equivalent per day by 2045. And coming to the global energy scene, Africa will play a very significant role. As a matter of fact, in the long term, the share of African energy demand in the global energy scene will be over 10%, and that surpasses the share of China and other Asian countries in the long term. But how do we achieve all this? We need, there needs to be, to achieve all this, for Africa to achieve its full potentials, there needs to be investment in the oil and gas sectors. Africa must also start to discover means by which they can consume and produce their oil in a manner and fashion that will address the global emission targets. I feel that in the future, Africa has a very big role to play, and the time to start playing that role is now. We should put an end to the rhetorics. We should put an end to the PowerPoint presentations, like what a comrade said in a meeting I attended some time ago. We should start converting this beautiful, promising presentation to megawatts that will pull out this plague of energy poverty that has plagued us as a continent. We want to be able to tell our sons and daughters that they will not have to use candles and lanterns to study the way I did when I was in high school and college, that there will be energy, there will be electricity for them in the coming years.
Clap. Very insightful there. Irene spoke a lot, touched on the global energy scene and the need for more investment. Jens, I want to borrow your insight on this coming from an organization that's very international. What is your take?
I think there is a bright future. There's hard work, but it's a bright future. In the conversations around this energy transition, 40% of the undeveloped minerals in Africa or in the world sit in Africa. So if you want your next iPhone, we know exactly where that lithium is going to come from. So that just creates a tremendous need. And I think Irene spoke to the growth, and GDP growth of 4% to 6% is quite exciting compared to the anemic growth we've seen in OECD markets over the last 10, 15 years. I think the challenge comes around how do we then sort of, until we create a large enough capital base on the continent, bring the capital from abroad that we need to accelerate this growth. And in that sense, energy poverty often comes across with greenhouse gas emission, and we can have that debate, but it's like discussing religion. The way we are trying to do this is to bring out the good stories. So yes, we're bringing good returns, but we're creating jobs. We're enabling economic growth. We're building critical infrastructure that unleashes further economic growth. And through that, when we set up our first fund in 2017, there was a very, very visible effect in Europe on what the challenges on the continent brought, and that was the refugee crisis. That is now sort of waned a little bit, perhaps sort of out of sight, out of mind, but we certainly feel with the investors we're talking to that when we bring out that story, it creates excitement, and hopefully that will continue to grow. We can enable ourselves to raise more capital to fund these critical infrastructure projects that will also not only benefit the continent, but also benefit people living in other parts of the world.
Great, Mr. Krage, what are your what's your take?
It's very interesting that when we talk of the UN Sustainable Development Goals, the major focus is on SDG number 7, which is clean and affordable energy for all. But there's also an SDG number 9, which is infrastructure, industrialization, and innovation, which is critical for Africa to truly get to where it's going to see its true potential. For Africa, first of all, if you look at the forecast over the next 2 decades, for Africa, our energy demand is projected to grow about 45%. Of that, the primary energy mix, fossil fuels, is going to be about 60% of that, which is coal, oil, natural gas. Simultaneously, as Irene said, population is going to grow. In fact, between now and 2040, 1 in 2 people born globally is expected to be African. All right. By 2035, it's estimated that we're going to have 30 cities in Africa with 5 million people or more in them. Massive market. So the question is going to be, it's not whether we're going to have a market, it's how are we going to actually feed those markets with cleaner transport and cooking fuel so we do not have an urban health disaster on our hands. That's what at least ARDA is focusing on. If you have increased population, increased energy demand, we need to start focusing on cleaner transport and cooking fuels. When we talk about energy transition, what should we be focusing on in Africa if our population is going to grow, if we're going to have air pollution issues? Should it not be on cleaner transport and cooking fuels now versus renewables, where majority of the technology, if you read the IEA Net Zero Emission by 2050 report, majority of the technology, whether it's carbon capture, utilization, and storage, whether it's hydrogen, that is required to meet those net zero emissions is actually still in prototype or demo stage. So we should actually be focusing right now on a defined decade by decade investment plan for Africa that focuses on cleaner transport and cooking fuels now, power generation, natural gas, and starts to bring in renewables technology as it becomes mature over time when the innovation is kicked in. So in summary, Africa, I think, has a very bright future, but I do think we need to focus on ensuring that we can produce cleaner transport and cooking fuels in in Africa first, before we now adopt renewables technology. And I think the future for the continent is pretty bright. Thank you.
Dr. Ibrahim, many people in the panel suggested that there's a glimmer of hope with Africa's energy sector. But then there's the issue of population growth. What's your take?
In a study that Apple commissioned and which is yet to go public, there is a great prospect for the industry on the African continent, but there are also very serious challenges facing us. Irene spoke about growth in Africa's energy demand, oil growth about 5 million barrels, 7 million. Kraga summarized the challenges, not just in Africa, but also globally, in the most eloquent way. We think that, seriously speaking, for too long, we have looked outside for the solutions to the challenges we have on the African continent. With 1.3 billion people and going to 2.5 in the next 30 years or so, no concrete arrangements have been made to ensure that we have ample energy for the people that we are going to bring into this earth in the next 30, 40 years. Our study had shown that left to each African country, we will not be able to get out of the poverty cycle. The solution lies in working together as a continent, working on the energy infrastructure for the continent, working to pool financial resources together for the continent, and working in terms of local content development, not in the perspective of countries, but on the perspective of the continent. These are issues that Apple is today looking at, because we don't believe that if each country is to go on its own the way it would have done in the last 50 or 60 years, we'll be able to get out of this mess. What we need to do, especially in the energy sector, is to forget our differences. Let's pool resources together, have on each of the various sub-regions of the African continent hubs of infrastructure, finance on the energy industry with which we can support these various sub-regions. This is something that Apple is working on, and to realize that, at least on the financial side, we have established the African Energy Investment Corporation. In the past, it used to be APA Fund for Technical Cooperation. It was wholly owned by the sovereigns of the member countries of Apple. Today, it is going to be public-private. The sovereigns will have about 49%, and the 51% will go to the private sector. So we believe that in the private sector lies the salvation of the industry, but the governments also have a responsibility to drive this or to give the nudge. Thank you.
Great, moving on swiftly. Forget our difference. What's your take, Jens? You know, any updated advances towards advancing regional trade investments and trade transformation, in your opinion?
I think we're still waiting to see sort of the long-term effects of the African Free Trade Agreement, and I think it's a great step. But obviously, for the last 2 years, there's been under inhibitions. I think there is. If I can give an example, we made an investment in a company called Aeronov in Ivory Coast, which has, in many ways, in our humble opinion, provides a best-in-class solution for building an economically sustainable electricity sector, which then uses domestic gas. We're now using that company to expand into neighboring Togo, where we're also looking to build a CCGT. It'll be the cleanest, most efficient, and I believe also most low-cost source of electricity produced in Togo. So I think there are examples of where our companies on the continent, real champions, are looking to branch out into neighboring country in a collaborative, cooperative manner. So we are obviously very excited about that.
Mr. Andrade, Angola, one of Africa's top oil producers. What's your take on regional trade?
I do agree with Jens. I think it's early days to see the results, but I wanted to go back to where is it that we see Africa in the future. And I'm very optimistic. I think we do have a bright future. We have touched here that we have been able to maintain a competitive oil industry in Africa. We heard today several times that Africa has great potential, not only in the oil and gas, but other forms of energy. So I'm hopeful, but I'm also very optimistic with the future that we have ahead of us. I do agree with Irene that we need to move from speeches and presentations to have actionable items that actually put us in a position to materialize this great potential that we have. So again, very bright future for Africa, in my view.
Okay. Akin, what's your take? Any updated advances towards advancing regional trade transformation from your knowledge?
I think the platforms are there from the regional organizations, ECOWAS, COMESA, SADC. But a few simple things. Collaboration, real collaboration. Incremental innovation. It's great to make new technologies, but again, if we can copy and copy better, there's no reason why not. So innovation is important, and my brother Anibal spoke about the innovation around cleaner E&P activities, reducing emissions as much as possible from oil and gas exploration. You cannot completely take it out, of course, But if we blend what we do with oil and gas with renewables, it's always going to be a mix. So it should not be either or. Everything should move as much as is possible for every country. There are countries that would be able to endure more, like Norway, for example, runs totally on nature. It would be great to see DRC, for example, to also run totally on hydro nature. So for countries, we all need to use our natural resources, oil, gas, solid minerals, whatever that is. And so if we leverage on the platform of all the regional bodies of the AU, the African Union, for example, if I sit in a room, I can partner with Jens and AP Moller and develop a joint venture. Countries need to do that. Angola needs to partner with Rwanda, for example. There are things that the two countries can do together. Our big brother from Apple spoke very strongly around local capital. That's happening. It's happening in Ethiopia. But can we accelerate this? I think it's possible. But everything needs to be kept simple. We should give messages that the man on the street can understand, that the man in London buying his burger can relate to. So if the message is simple and the messaging is clear, I think ultimately, and we do the work, because we all can talk as much as we want, but the say-do ratio needs to be more towards the doing and less towards the talking.
I see you shaking your head a lot, Mr. Krager. What are your thoughts?
I was nodding, actually, not shaking.
Oh, you were nodding.
I was nodding.
Oh.
But actually, I just building on what Jens said and what my brother Akin also mentioned, I think I'll give you an example of the downstream. In Africa, it might interest you to know that for gas oil or diesel, we have 11 different grades ranging from 10 parts per million sulfur to 10,000 parts per million. For gasoline, you have 12 grades ranging from 10 parts per million to 2,500 parts per million. How do you actually sell across borders in those kind of situations? You'll encourage smuggling, fuel adulteration, and the like. So one of the things ARDA is working on, and we've been working on, like Aki mentioned, with the African Union Commission, to start on harmonizing fuel specs across the continent. So we have a single spec, 10 parts per million sulfur by 2030, and putting an investment plan to ensure everybody has that. With that, with the Africa Continental Free Trade Act, with the regional economic commissions, then we can have a real actionable plan on how to get this done. But if you have so many different, we're not even talking tariffs, we're just talking of different specs. How do you do business? What ultimately happens is you have fractured supply chains, which ultimately pass on higher costs to the consumer. So what we need to do is harmonize specs, harmonize tariffs, and ensure that we have the means to engage across borders to ensure that we can actually put in place and use the regional economic commissions, use the African Union. We're hopefully the second to last step with the African Union, where we can actually implement this and have action plans in place for 10 ppm by 2030. Some of the regional economic commissions like ECOWAS, EAC, and the like are also working in tandem with that. So hopefully we'll see some positive results soon. Thank you.
Okay, our last question. Many analysts point to the incentives towards improving access to geological information and data so as to increase investment, exploration projects. What's your take on that, Dr. Ibrahim?
Well, you can't do much without information, geological information. And if you really want to attract investors, you can't afford not to give them what will attract them to the industry. The good thing is that so far, a number of upper member countries, let's say African oil and gas producers, have succeeded to a large extent in getting data available to those who need it to be able to make informed decisions on investments. You can't do more. You can't do more than enough, really, finding this data and making it available. It is very important. It's the key, actually, to attracting this investment. And so far, I think a number of our countries have been able to do this. The question is, for how long will we now be able to give out this information and get the investors. Unfortunately, madam.
And on that note, I'm sorry to cut you, Dr. Ibrahim, we don't have a lot of time.
Okay.
But I saw Jens nodding. Am I right? Nodding. And so what's your take on what Dr. Ibrahim said?
I'll be short and brief. This is not my expertise, but obviously geology information is absolutely critical, and it's commercially sensitive information, I'm sure. But in the interest of enabling growth, I fully support what Dr. Ibrahim is saying here.
Okay, I believe that's the end of the discussion. We have a Q&A now.
All right, thank you so much, speakers. We have actually a 1 minute for about 2 questions before we break for a few minutes. We are running a bit over and we apologize immensely for that because of our ministry session. If anybody would like to ask a certain question to the speakers, we are open for the floor. We'd like to take 2 questions. Anybody? I may come to you with the mic, do not worry. All right, no questions.
Well, if there are no questions,
I have a quick question. My question is for my brother Jens. Do you see Epimuller investing in the oil and gas on the production side or on the E&P space?
Not as such. It's outside of our current scope. We started midstream and moved downstream. Not because of that we don't like the sector, it's more linked to our expertise.
And do you see more foreign capital, such as yourself, following that same path into the sector?
I do unfortunately believe so, yes.
Good.
I think
That's
you've
great.
seen the Harvard Foundation, for instance, has sort of deselected fossil fuels, but I strongly support you in the challenges of getting capital to unlock the resource potential. Apologies.
Mr. Krager, feel free to...
Well, I was very excited to hear that you're investing in the midstream and downstream. It's paid for my trip just coming here. But jokes aside, I did mention the quest to actually get to 10 ppm. I do believe there's an ESG case for getting from 10,000 ppm to 10 ppm, and that should help attract investment. Across Africa, we have about 36 refineries, which are going to need an estimate of about $15.7 billion to get them producing 10 ppm fuels. I mean, there's 17 in North Africa, which is about just under 6 billion. Southern Africa, 7, just about 3.4 billion. And Western Central Africa, 12, which will need about 6.3 billion. So from what I've heard, this is something that hopefully should be available. And then beyond that, there's a major push for LPG for clean cooking. I do believe that LPG will serve as the best near-term option for reducing Africa's carbon footprint, and I'm hoping you'll be investing in that as well.
Great. Irene, do you have a last, a closing remark or anything?
Yeah, I would just like to say that my hopes, coming here today has raised my hopes that Africa is going to play a major role, in the global energy scene in the long term. I've also heard promising speeches from our ministers, and I'm going to go home to tell my 8-year-old daughter that she should not worry about her future in terms of energy, and that we are taking bold transformative steps to tackle the issue of energy poverty in the long term. Thank you.
Thank you, panelists. Very engaging discussion.
Fantastic. A round of applause for our amazing panelists. I loved your